Stock market analysis and projections on the S&P 500. Important information. Just read this slide. It talks about our approach to the markets and how you can use that to your best advantage. It's important that you read this slide. askSlim holiday specials for 2023 are now available. Give the gift of askSlim. Go to our website at askSlim.com and you can learn more. Or write to Matt at askSlim.com and you can get all the information about our great services. This is what the holiday special is. Give the gift of askSlim for 2023. We have special rates. That's 3-month memberships, non-recurring. That means if you give the gift to somebody, well, you don't have to worry about them getting billed again, or if you want to take it for yourself, it's just for 3 months. Then you'll have to decide whether or not you want to stay on with that membership. Give the gift to someone you know who loves trading, or to somebody who loves technical analysis, or give the gift to yourself. It's great for first-time members or for those of you that want to try a higher level and want to upgrade. And we're going to give you a bonus gift. That means you give the gift to yourself or somebody else, and we're going to give you a gift. For level 2, sign up for 3 months for $114.75. We're going to send you back an Amazon gift card for $20. For level 3, give that special for just $232 for 3 months, and we're going to send you back $50. And for level 4, $303.75 for 3 months. Unbelievable deal, because we're going to send you back an Amazon gift card for $100. And our level 4 memberships includes our custom Thinkorswim charts. You can upload those right to the platform, and you will get all of our proprietary studies that you've seen that are just amazing. To sign up, go to askSlim.com, and you can write to Matt at askSlim.com for all the information that you need. The askSlim holiday specials for 2023. Give that gift of askSlim. Stock market analysis, S&P 500, NASDAQ, Russell, short-term analysis, plus our proprietary studies. So I'm going to take you through in detail the analysis that I do, that our analysts do on a daily basis, and you'll be able to see how we do our projections and why. We have been positive on the market, believing it was going to be moving up. Our target on the S&P 500 has been 4607. It's actually, at this point, as I'm doing this recording, only about 17 points from there. That's a pretty key resistance area, and I'm going to show you how we do this analysis and give you a sense for our other indicators. So let's switch over now to the charts, and we'll take a look at the S&P 500. Let's take a look at the cycle analysis right here, and you will get a great sense for the type of analysis we do as I blow it into the S&P 500 right now. I'm just going to take a look at these cycles right in there and do a little teaching around that. On the bottom here are the cycle brackets. Those are drawing tools that give us a sense for the rhythms in the market. Cycles are a repeating pattern that goes in a similar length from trough to trough. As you can see, there's a dominant cycle in here and a minor. This makes up the harmonic families. And let's talk about this cycle right in here, the minor one. Look at the shape right over here, and actually how it found support on the slim ribbon. The slim ribbon is in a configuration that is positive. It tells you momentum is positive with the shortest moving average above the middle moving average, and they're both above the longer moving average. And you can get this for free, actually, on several different sites, charting platforms. So you can write to team at askSlim.com to get that information. And this is a positive cycle right over here. Also, you can see in here that the peak came way on the right side over here. This is called a right-hand translation, and that's bullish. And it says that higher highs and higher troughs right over here in this positive cycle is likely to get you a higher high, as you could see here. Came up right to that 78.6% fib extension, and then gave you that reversal pattern right there. And then came down and made a lower low. You can see that, how this cycle now was configured negatively. That says you really need to watch for a failure in resistance. And you can see as it came right up over here, that's what happened. It missed the repair level, as you can see right over there, by a little bit. failed in resistance, and you had another negative cycle. So this was a minor negative cycle. That says that this dominant cycle is likely to resolve itself on the downside because the first cycle was negative and then the second cycle was negative. And you can see that when you have this alignment, when they're both moving down together right over there, that is outward flows of funds, that sends the indexes down, as you see right over here and right over here. So where are we right now is this minor cycle right there. And the question is, where's the corrective period in there? And because there is very little sign of any correction, it is telling you that there is a lot of strength in the market. In other words, what's happening is that this dominant cycle that you see right over here is so strong, it is swamping the minor cycle. It is not allowing corrections. Now, there's a few days in here still. This is the, what we do is create this kind of double channel or cloud area right over here as we do our projections. And then you can see what we're expecting. If it was a worst case, it would come down to this level, the average case right over here, and a real positive condition would be only coming into the middle of the slim ribbon and then turning up again. There's a potential that the low has been seen already, but it's more likely that there's a correction into next week, and then the market moving up again and testing this area of 4607. If it were to get through there on the S&P 500, the weekly charts are showing the next resistances or target area into the 4700s. I don't have that on here, but that's what I would be showing. On the bottom, you can see here is the slim ribbon PO. I'm going to show you that on another chart right now, and you get the idea of the market conditions using our proprietary studies. So what you're looking at here is the slim ribbon, and the chart is in an area chart. So when it's green, it screams at you that the conditions are positive. When it's red, it screams at you the conditions are negative. Here's that slim ribbon PO, and when it's green, the conditions are positive, and when you get the up arrows, it tells you that there is likely to be a momentum resumption in that direction, in this case to the upside, in this case to the downside, but you could see it never really resolved itself and then turned neutral, and here you could see it be up to the upside again. On the bottom, this is the option bias study. This is an amazing study. What this is meant for is option traders or even swing traders to keep you on the right side of the market, to bias your positions on the side of the market that has the greatest momentum and the highest probability of impulses in that direction. Money flow is coming in a rush in that direction. That's what it tells you. Here you could see it was green when it's P3. It's very green and very positive. When it becomes P3, P2, it's telling you it's slightly overbought. You might look for some backing and filling or some corrections in there. It went back to P3, and here you could see it went negative as the market was moving down and momentum turned negative. And here where you see the P1 orange, that tells you extreme oversold condition, bottom warning, likely to be forming some kind of a bottom, which you could see that it did. So right now, well, it's powerful, it's up. P2 is telling you the market is strong, it's slightly overbought. You could get some correction in here like I'm talking about on the daily chart. But overall, these are very strong conditions as you look at that on the S&P 500. So maybe a pullback here into next week at some point and then moving up again. I do expect 4607 will be a problem for it now as you get into some little corrective period, but if it gets through, it will have a strong message. Let's take a look at the NASDAQ NDX, and this has got, you know, patterns that are somewhat in alignment with the S&P 500. As you can see the dominant and minor cycles and those beautiful rhythms that you see in there that match up with the average cycle lengths on the bottom. And here you could see it's actually correcting into that period that we were expecting. That 23.6% is the most obvious spot around 15,650. So that would be 300 something points on the downside in the next week before it then begins to move up. Here's your fib extensions right there where some resistances are. That's 16,160. And this one up over here, if it really took off, would be about 16,500 there. More likely it's going to take this lower track right in here, give you a little more correction, and then move up. Now, you see that at this point, I only have it coming up here in testing. The reason for that, and this rally out over here into December, mid-December, is because what we see in changing money flows. And like I showed in the beginning of the show, the amount of money that has gone, into the Magnificent Seven, and the fact that they are a huge portion of the S&P 500 and a huge portion of the gains we saw in the last year, and the fact that we're getting a rotationary market that's showing up already, it really says to me that the NASDAQ's going to have a harder time moving up. I wouldn't be surprised if this got slammed here and then it moved up and didn't make a new high over this next week. So we'll see how that shapes up. You can see this minor cycle in here. These two dashed lines are telling you the area in which we expect the timing of the low to come, the timing of that, and then beginning to move up again. So down, up, that's what we showed you in the S&P 500. Though I would expect the S&P 500 to achieve that level of 4607, where this one might really struggle to continue to move up. Let's take a look here at our proprietary indicators. You can see that let me just grab my arrow here, that the S&P, the NASDAQ right over here, look at it, how it's flattening out right there, as you can see. And it still is showing you positive momentum. It's still in this green area right there. Look at the bottom warning that you got also there when you look at the option bias study. And still positive right over there. All of this is pretty well aligned with the S&P 500, but giving you signs that it is beginning to flatten out, and this rotation is really starting to take hold that we see here. So that's the look at the NASDAQ, down probably in the next week, then trying to rally again is what we see on the short term. Overall momentum conditions still quite strong. Now there's a great lessons here as I look at the Russell, and I think that this is going to be helpful to you in understanding the way that we use cyclical analysis in some more sophisticated form. And you can see in here that there was an uptrend. Now, what defines the uptrend? Well, it's the cycles in here that give you higher troughs and higher peaks, as you see right in here. And it's going up this upward channel. Now, note how this was a very positive cycle, and it came up here and then failed quickly underneath that cycle low. You can see where the low was due based on that timing, and then broke that. That says to us that something is changing. And this cycle came down right in here, right through this time frame. But you could see it really sends this channel to the downside right over there. And then the next cycle was a cycle that failed in the sell zone, as you can see. This one, a left-hand translation, the peak was way on the left side. And if you want to learn about these things, take our cycle analysis workshop. Negative cycle, negative cycle. Here's your negative cycle, negative cycle, negative cycle, negative cycle, and then something changed. What changed? Well, what we saw was that this rally got above these levels over here, and that is a cycle breakout, and it tells us that this is now turning positive. So you'll notice in here that, see these lines right here, they tell us about the inverted head and shoulders that formed, left shoulder, head, right shoulder, and this pretty steeply slanting neckline that you see right there, and that gives us the projections to the upside target. In addition to that, you can see that the cycles formed that inverted head and shoulders, and that now we have this upward channel formed in there, and that it is continuing to move to the upside. We'll take a closer look that you can see right in here, and you will be able to see that note that we have there for the members. I'll tell you about that in a second. Positive cycle here, now moving up right there. There is a pretty major resistance there, the major 61.8 at 1860 approximately. We also have this fib extension at 1867, another one right over here at 1892, and then one more here at 1914. So this tells you that it's likely to continue moving up and then have its corrective period right between these two lines. You can see the low, the low, the low, and the projected low in this cycle. The question is, will it hold up in this upward trend, or will it break down? If it gets below this low right over here that it made, it will give us a warning that it is in worse shape. I don't expect that. You could see in here the slim ribbon pointing to the upside, the momentum conditions as positive, and this positive cycle bringing you a higher high, and maybe you get another one over here as this moves up out into the January period, out into maybe 1914. I want you to note that these look different than the S&P and the NASDAQ. And the reason is because this cycle period, the length is shorter. And that's because the Russell often has a life of its own. It's a very strong reflection of interest rates because these are zombie stocks. They borrow a ton of money, and when rates are cheaper, they do better. And that's what's going on right now. Interest rates falling and the money coming into the Russell in a giant way, where today we have the NASDAQ unchanged on the day basically, and the Russell's up 2.4%. So this is a great look at that. And those of you that are subscribers to our day trader service, you can see these how the NASDAQ is well overperforming the other indexes. And when using that service. So that's an important service if you don't subscribe to that yet. So Russell looking like it's in decent shape. Looking at that, or better than decent shape, here you could see that what's going on in here is this is where it was positive right there. You could see all these positive signals on the Slim Ribbon PO. Level 4 members get these. And you could see where it turns negative here, negative signals right there, and now positive and upward resumption signals. This is the look at the option bias study. Man, was that positive here, negative here. Keeps your biases correctly pointed when you have that. That's what you want to do, is to be able to be on the right side and avoid the big impulses. In this case, impulse to the downside, impulse to the downside, here and here and here. You want to be short when that's going on. Impulses to the long side is what you can expect right there, and you can see that you're getting that today. This is just, I don't know how you can trade without having this fantastic information. Again, these are level 4 studies, and if you want to learn how to get these on a Thinkorswim platform, then write to team@AskSlim.com, and they will help you with that. And you'll be able to become a level 4 member and get these just by taking our non-recurring Give the Gift membership. If you haven't seen that, look in the beginning of the show. I give you a detailed description of how you could sign up and then have a non-recurring membership and get all this and learn a ton from us and improve your trading. So really important information when you look at that. This is that Russell again, pointing to higher prices, maybe some consolidation out over here after peaking mid-December, come down into mid to late December right over here, and another rally out into January, potentially getting up into these levels. One more thing, I want to take just a moment and show you the market condition monitor, MCM. This is really a fantastic application. I showed you a lot of the short-term analysis just now. I want to take that a little bit further, and this application gives you an idea here of what we're looking at. These are the 4 indexes that are on here, and this shows you the conditions of the market. I want you to notice that the QQQ has turned neutral now after them being positive, while you have S&P 500 as very bullish, the Dow is very bullish, and this gives you the weekly, daily, and 2-hour conditions of our Reversal Scout and Slim Ribbon. And if you want to get notified, if you have this and you're a level 4 member, because that's the premium version of this, you just click on that and you click on the ones you want to get notified on, and it tells you when something changes in here. So this is short term. I'll give you a little peek at the intermediate term on these, and you can see that these are very bullish still as far as the intermediate term. These weekly charts and monthly charts are really giving a sense for strong market conditions, and that's really helpful. Let's go back to the short term right there. If you were, and I'm on the trader version, so you could pick what type of trader you are. If you want to go on the time frame version, you can see that right there. It gives you a little different look at the similar information. And if you, this has many stocks in here and ETFs, as you could see. If you want to see the trade setup setup conditions. Here you can see that there are several. There's the top 5 that are in very bullish condition right over there. If I go to the negative ones, there's the worst ones, as you can see: Exxon, Win, BABA, UNG, and LIT. Those are very bearish. So this is a great way. I talked about in the beginning of the show about the rotationary market that we are in, and this is a good way to see which stocks are strong and which stocks are weak, and even get notified about when they make some changes. So I wanted to give you a good look at that. This is our market condition monitor, and this, I think, will be very helpful to you in the nature of markets that I think are moving forward. Rotationary, and where you really have to be really good at your market selection. So that's a look at the market condition monitor and the conditions right now, and the most bearish or most bullish 5 that I wanted you to see. Remember that our team is an agnostic team of analysts. 4 of us. We just look at the charts. We share with you what we see in them. So many analysts out there get stuck to their analysis, and with the market moving against their calls, it gets really frustrating and challenging. We don't do that. We just let the market speak to us in the language that we understand. And what we do is try to teach you that language as we bring this information to you. I hope you found that extremely valuable. And again, any questions you have, write to team@askSlim.com. This is our free snapshot that you can get every day on the S&P 500. And the reason I'm focusing on this now is because you can then sign up for it and get my big picture analysis for 24 when it's released at the beginning of January. And you'll get it with all of our premium members, versus on social media. It won't come out for several weeks after that. So you'll want to get this information quickly. No credit card necessary. Just sign up for this information. You don't want our daily information and become a free member, and you won't get the S&P information, but still you will be able to see my big picture analysis for 24 when it comes out right at the beginning of the year. Great information coming to you. Don't forget our holiday specials. Watch the video clip that I have earlier in the show. It tells you all about Give the Gift of AskSlim. Go to our website to the top and click Learn More, and you'll get more information on there. Any questions, write to Matt at askSlim.com.